Welcome back, traders. I'm recording this one in my ultra-wide monitor purely because I want to be able to show you more what's happening in the market and have more different currencies open. So I hope you don't mind the aspect ratio too much. I will try to make it as clear as possible. What we're looking at on this video is how to take a deeper look at a particular currency. We briefly touched on it last week when we were saying that if we have a look at the US dollar versus a few other currencies, we can get a feel for how things are going. So what I've done is I've opened up 6 different currencies. They're all bigger currency pairs out there, so they're not really small at all, and they all have the US dollar in it. If you have a look on the left hand side, we have the euro dollar, pound dollar, and the Aussie dollar. Then further to the right, we have the dollar Swissy, the dollar yen, and the dollar loonie. Reason why I did this is I wanted the dollars to be on the same side. So the first 3, the dollars on the right hand side, meaning it is the quote currency. And on the 3 on the right, the dollars on the left, meaning it is the base currency. Now, without having to spend too much time looking at what's happening in recent history, we can get a general idea for the trend just by looking at the chart. We can see on the euro dollar, the longer term trend has definitely been bearish. We've recently had a bullish movement, but it doesn't look significant compared to the bearish, so it might be a continuation. But for now, we will say bigger picture is bearish, the shorter time frame is bullish. If we have a look at the pound dollar, we have pretty much the same thing, where we've had a much bigger bearish movement, but this one was interrupted by a bullish movement in the middle. Now, because this happened on the pound dollar and not the euro dollar, something would have happened in the pound or the euro to have changed that. Then if we have a look at the Aussie US dollar, we have something very weird going on. It looks like it started off with the same bearish movement that we had on the pound and the euro. But then when the pound dollar started retracing up, we see that the Aussie dollar did the same thing. Then we had bearish, and then we had a strong bullish position. So this generally means that if you have a deviation like this, then there's a good chance that something happened in Australia, which strengthened the Australian dollar. Now, if you wanted to go into further detail, you would then load up a few currency pairs that has the Australian dollar in it and start comparing it to other things on the market. But for now, we are looking at the US dollar, so I'm going to keep what we have open in front of us now. Now we have the US dollar Swiss franc. Now remember, the US dollar is now on the left hand side, so when the market goes down, it is showing a weakening of the US dollar. Whereas on the right hand side, when it goes up like it did in the Aussie dollar, then it shows a weakening in the US dollar again, because it is the quote and not the base currency. So the Swiss franc, if we were to invert this, we would have a very similar picture to the Australian dollar, except we have much more noise in the middle. But recent history is showing that the US dollar is getting hammered by the Swiss franc, very much how it's getting hammered by the Australian dollar. The dollar yen has been completely bullish, with very few deviations inside. In actual fact, this wouldn't even really be a retracement. This would just be a continuation of the bullish trend, but giving us new entry points inside. And this bearish trend that we're heading on right now looks very much like it might turn bullish and continue with a bigger trend. So the US dollar is doing quite well against these Asian markets. Then we have the US dollar Canadian dollar, or the dollar loonie. This one has been crazy. You know, when you start seeing movements like this, it's almost like the currency is undecided. And we do very often see that the US dollar and Canadian dollar move alongside each other quite a lot. We don't often see very much of a difference between them because there's so much commerce between the two countries, because people travel back and forth. A lot of families will have family members in one country when they live in the other one. So we find that the economies are relatively linked. So what you need to do when you see a movement like this is you actually need to measure and see how much movement is it really. So by using this tool, I can see that from the highest to the lowest, we're looking at 177 pips. So that is actually quite a fair movement. We don't often see this. This might have something to do with the fact that Canada has a very different foreign policy to Donald Trump's America. So we are very likely to start seeing more deviation between the two, and usually I wouldn't trade currency pairs like the US dollar, Canadian dollar, because they were closely linked in the past. But with this sort of deviation, you know, if we're looking at 177 pip range, there's more than enough room to play inside there. But still, if you were to compare it to something like the euro dollar, and we measure from the highest to the lowest, we can see here that we hit 280, making this a much better currency for you to actually be trading. So what does all of this tell us about the US dollar? Is it really giving us a good outlook on what is happening to the US dollar itself when we compare it to a lot of other currencies? Or is it just going to confuse us even more? When we take into account the largest currencies, and obviously the US dollar is number one. Following that, we have the euro, which is the second biggest player in the world market. And then we have other large currencies like the British pound involved as well, and even the Japanese yen. So if we were to look at just those three currencies, we can get a fair idea of how the US dollar is actually doing. So let me load this up. Here we go. So now we look at the euro dollar again, and we see we're bearish movement. This means that the euro is weakening in relation to the US dollar. The pound dollar, we see very much the same kind of movement. It's overall bearish. We do have the short-term bullish, but we need that to play out before we can actually see what's going on. So this means that the British pound is weakening against the US dollar. And on the right-hand side, we have the Japanese yen, which is bullish, which means that the US dollar is also strengthening. So despite everything that's happening over in America, specifically with the Iran deal, which could fall flat and be a big problem on the world stage, we're still seeing that the US dollar is increasing quite nicely across the board. So in placing a trade that involves the US dollar, unless something very specific has come out of the currency that I'm trading it against, I will most likely be purchasing US dollars. That would mean I'd be selling on the euro dollar, selling on the pound dollar, or purchasing on the US dollar Japanese yen, especially for those longer term positions. Things are still strengthening if you look at the technical analysis, but fundamentals are going to be painting a very different picture in the days coming up. So make sure you're keeping an eye on what President Trump is saying, because we might be opening up for a fantastic reversal in the US dollar, which won't be very good for them, but it'll be absolutely fantastic for us traders.